You finish your tax return. You hit submit for 1 second. Before the confirmation screen loads, a thought flickers through your head. What if this is the year they audit me? Most people picture a stranger in a beige office, flipping through their receipts. They picture someone deciding on a whim. Here's what actually happens in that second. Not months later right then. Your return hits a formula. That formula assigns you a number. No human has read your return yet. A machine already has an opinion about you. The formula is called DIF, Discriminant Function. The IRS built it decades ago to compare your return against thousands of others like it. Same income bracket, same job type, same deductions. If your numbers drift too far from that pattern, your score climbs. A rounded number here, a deduction that looks unusually large there. Enough small deviations, and the score flags you. The agency does not even know your name yet. Only about 3 out of 4 audits start this way. The rest come from informant tips, unrelated investigations, or a small pool of returns pulled for pure research. That research pool exists for one reason: to keep the formula itself honest. But DIF never works alone. A second system operates beneath it. It is called the Automated Underreporter Program. Every W-2 your employer files lands in one database. Every 1,099 your bank sends lands there too. Your return lands in that same database. The system compares all of it automatically. Report less than your employer already told the IRS you earned. A letter follows within weeks. No agent chose to send it. The mismatch triggered it by itself. A high score or a bad match does not mean an audit yet. It means a person finally looks. That person is called a classifier, an examiner. They decide if the flag deserves a real audit or just a pass. So the machine builds the shortlist. A person only approves it, mostly yes, and that shortlist is about to get a lot longer. In 2025, the IRS lost a quarter of its workforce. Budget cuts, attrition, a wave of departures across the agency, all at once. To cover the gap, the IRS turned outward to a defense and data analytics contractor called Palantir. The agency has now paid Palantir more than $130 million since 2018 to build tools that hunt for patterns across dozens of federal databases. The newest one is called Snap, the selection and analytic platform. Its pilot targets 3 areas first: clean energy tax credits, disaster relief claims, large gift tax returns. A government watchdog counted 126 active AI projects inside the IRS last year. 10 of those existed in 2022. One detail makes this stranger. Palantir was co-founded by Peter Thiel. Thiel is famous for a different reason. He turned a $2,000 retirement account into a $5 billion fortune, tax-free. He did it using loopholes his own lawyers found first. His company now helps decide who else gets checked. You would expect this machine to chase the biggest numbers. The millionaires, the corporations, the returns with the most money to recover. It mostly does not. Back in 2010, the IRS audited about 9 out of every 1,000 returns. Today, it audits fewer than 3. Fewer agents, fewer field audits, more reliance on whatever is fastest to close. That pressure lands unevenly. Taxpayers claiming the Earned Income Tax Credit get audited at nearly 3 times the average rate. These are some of the lowest earners in the country, not because they cheat more. Their audits are correspondence audits. A letter, a few documents. Closed in weeks. Auditing a complex high-income return takes a specialist months. The system was built to process cases efficiently. Efficient does not mean fair. The cheap, fast case wins. That is what happens when volume is the number that gets measured. So the next time you hit submit, you will know what actually happens. There's no stranger in a beige office, not at first. A formula scores you before a person exists anywhere in the process. A second system checks your numbers against everyone who already reported on you. Increasingly, a contractor's AI is doing the sorting underneath both, and the return most likely to get flagged is not necessarily the one hiding the most money. It might just be the one that is cheapest to check.